Happy Friday, traders. It is 8:04 a.m. Chicago time on Friday, the 21st of August, 2020. Please let me know if I sound clear or not. I've been having issues with my home setup, the microphones. Uh, this is episode 1824. Thanks for joining me again. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Guess what? It is the third Friday of the month, and this Friday we usually have you type in your city, state, and country, if you would, so that your fellow traders can see you and can look around and maybe find someone nearby. We do our best to kind of connect you. Just to tweet at me. Somewhat strong. Okay, thank you for that. All right, corrected. You can tweet at me at twitter.com/futurestrader71 if you want to get connected with someone in your area. If you're on Periscope, you can always type it into Periscope, or of course, you can just punch it into the comments in this video if you're watching this later on and not live. Again, coming at you live from Chicago, it's 8:05 a.m. This morning, the risk allocation is risk off again. We are below where we ended up yesterday, and the market overall having a hard time pushing through to 96.75 in the S&Ps. The S&Ps got to 93.50 and have rolled over and are currently trading 33.69. The dollar is up yet again, 47 cents, trading at 93.25, and the futures up 0.51%. The bonds are up another 13 ticks. The Bund is up 22 ticks. The Treasury, the 10-year note, is up 4.5 big ticks. The Nasdaq's down 1675. It's the strongest of the equities, and it's still down 0.14%. Crude is off almost 2%, $42, down 83 cents. Euro stock's down 51 points. The DAX is down 186. That's about a 1.5%. And the Russell's weak again today versus yesterday's close. Again, the S&P is down 10.75 points, or 0.32%. So risk off coming into yesterday. We're trading inside of yesterday's range in the S&Ps, and it's looking like it is a day of balancing. So that's where we stand on that front. In the calendar, let's filter out. The calendar's been busy today. We had a lot of numbers out of Europe, Great Britain retail sales, market manufacturing out of France, Germany, Eurozone, Great Britain as well, and then the U.S. is expected to have its August flash manufacturing PMI, market PMI, come out at 15 minutes after the open, expecting 52 for manufacturing. For services, expecting 51.5, composite 51.7. We do get consumer confidence out of the Eurozone at 10 o'clock Eastern, just a half hour after the open, expecting negative 14, and then we wrap up our economic releases with existing home sales at 10 a.m. U.S. existing home sales for July, month-on-month, expected at plus 10.2. The prior's plus 20.7. That was a crazy strong number. And 5.2 million units. Okay? So that's where we stand. You guys are hearing static. I'm not getting that feedback. Anyway, that's where we stand. Let's hop right into what was expected yesterday in our review segment as we follow the same routine you guys have become familiar with over the last, 6 years or something, 7 years. Here's where we left it yesterday. Yesterday, the expectation is we open up, we test lower test lower, impulse up, and then continue higher and push into the 75 area, expecting the market to push into 32.75 and then rest right here. And the reason I expected it to rest right here is because 71 is the MC point of control. The MC point of control, static, very odd. The MC point of control at 71, so I expected the market to rest here, but overall the expectation is a dip and a rally, responsive rally coming into the session yesterday. So responsive buying, we were opening in a gap down, and I expected it back in the prior range. Static. Anyway, I can't do anything about it. I don't believe I'm geared up here. Sorry about that. I'll probably spring for a high-end USB mic for home use. These regular mics don't really work well. So that's what was expected on the primary scenario. The secondary is a responsive buying back to the low end of yesterday's range, 65. And if it fails to hold yesterday's range, expect an impulse down and a continuation lower. Take out the overnight low at 42. And here's what actually happened. This is yesterday's action right here. The market is currently rallying, by the way. Here's what actually happened. We opened and we did not dip down. The market's really not dipping down as I would expect. And so it becomes responsive immediately and pulls back to the 71. There's the 71 right there. Pulls back to the 71, goes to the 75. This was our target for the day, the target high for the day. Goes to the 75, consolidates at the 71 area as we would expect whenever there's a point of control, either an MC point of control or just a regular point of control. It doesn't matter. It's still likely to rest here, and in the afternoon it continues to rotate up and makes its way to this double top local, excuse me, 1 second. Double top local week high. So there's a little bit of structure to deal with here. We had the opening swing low. We had this double top from Wednesday, double top that was in the that was the mid short area for that day, and then we continue forward, and that becomes the high of yesterday. A little bit of structure there. It did push farther than expected, and the market was in a pretty active price discovery mode, as you can see from the profile. We did build a nice high volume node and a point of control right on top of the 71. Right on top of the 71. Okay, thanks. Yeah, that's wind. That's different. Right on top of the 71, and then it shifted it up. So we have a market that is really orderly and is following regular auction, the auction process. And so it's stood to follow the main idea. Again, the main idea, we normally get a dip. The market doesn't generally move up with confidence until it tests the other side. I'm sure many of you remember Jesse Livermore talked about this in Reminiscences of a Stock Operator. That was, what, 100 years ago or something. The market tends to check and then move up with confidence. Instead, it opened and it moved up with confidence right into the 75 and continued to push higher. Scenario 1 was in play. Scenario 1 was correct. For the most part, just didn't give us the dip. Didn't give us the dip on the way down. Don't worry about the static. There's nothing I can do about it. And it'll be replaced. The mic will be replaced with something better for next time. This is just my home setup. My office setup has a high-end mic. So, where does that leave us with today? Where does that leave us with today? So this looks a little messy. I know this chart contains the full session, the light gray area, this gray area right here, is the Globex, or extended trading hours. This is RTH, so this is RTH here. So the blue profile, is the RTH profile. This profile is the full session as it says right here. And so what we have is a market that has dropped down, consolidated, and then taken back as it's done in the past. It keeps it has pushed up and recovered and came back basically to where it was on Wednesday. Since then, we continue to push higher. We pushed into 92.50, 93.50, and rolled over, and we're selling off again. And here we are bouncing back up, and we're starting to move into the full session full session VWAP area. Volume is pretty good today, 283,000. 283,000, and overall, it's been a pretty orderly sell-off. We did get an impulse. This is, by the way, a half-hour chart, so there's a lot going on in these bars. But overall, not seeing the delta playing along. I mean, we have the worst it got was negative 6,000 or so, and it's negative 2,400. The overnight inventory is relatively short. Looks like a lot more traded, a fair amount traded below yesterday's close than above. But overall, the inventory is balancing as we speak. Okay. Again, this is the third Friday of the month, normally an auction expiration Friday. And on this Friday, we generally ask everybody here to type in their city, state, and country so we can all look around and see who's around us, okay? So here we are, tangled. Let's look at the volume scope. Here we are tangling with the full session VWAP and mid. We have pretty good delta going into this push up. Expect it to stall here for a little bit. Roll over, pull back. Expect it to pull back to the 69.70 area for a continuation in the short term. This would be a short setup for me, short term, short scalp really, and then looking for the pullback to continue long with the direction of the trend. Here's where that's where that stands. Let's take a look at the order flow currently. So this is how things look in terms of the order flow. It's been climbing and climbing and climbing and climbing. Okay, after the sell-off, there's pretty good buy delta right here. You can see the CVD is pushing higher, pretty good. This is pretty meaningful buying, but overall, not seeing seeing pretty bizarre patterns in the heat map today. A lot of just odd. I don't know if it's something with the feed, but a lot of these odd bids and offers that are causing these lines. I'm seeing a lot of noise in the feed today. There's not much we can glean from it. Again, this rally here is expected to stall in this area. Here it is. Expecting it to stall here a little bit. It's getting a little bit ahead of itself. This is an impulse up. Expecting a pullback, and then continuation higher. Let's take a look at what's expected for today. All right, so what are we looking for today? We're looking for we are smack dab on top of the prior point of control. We have this MC point of control just beneath us at 71 right here, 71. This is yesterday's point of control. This is where we're opening. There's a bit of resistance right here, price action resistance right there, right there. This is a half-hour chart. I'm expecting it to stall out here, as I said, pull back a little bit before it continues higher, if it's going to continue higher. We're seeing Delta turn up, pretty good Delta bar right here, a nice little push. And overall, I'm expecting the market to open. It's opening in range and value. And I'm looking for it to open, pull back a little bit, and I'm looking for it to push higher, consolidate in this area, and then continue towards yesterday's high, which was 87, and then start to tackle this this high of 93.50 on the overnight session. I'm looking for this to continue towards 96. I have been looking for 3,400 all week, but the market has failed to get there. There was, if you recall, there was quite a bit of resistance at the 80 that caused us to pull back, and that's been taken out. And I'm seeing a fair amount of icebergs here active, buy icebergs active at the moment. That is the primary scenario. The secondary scenario is it opens, pushes into this high volume node, consolidates against the prior day's value high, and then holds steady here for a typical Friday trade before it starts to pull back, and then we likely get a rally into the close, as we've often done on Fridays. These are the two main scenarios. The third scenario, of course, is to test higher, unable, pushes up against this, let me draw that, pushes up against this heavy volume from the overnight session, and then impulses down, comes back below the open, and starts to work itself back down through the overnight low. So when I pull up the stock zones here, we still have basically the same areas. This 56 is new. We still have 50, 45, 43 from yesterday. Above us, we have the 83. The 65 has been key, which we're above 65. This is why I would look for a pullback for a continuation higher. 80, 83, and then above there, we're at the overnight high, and then 96.75, which is the prior high, and then 400. These are the key areas on the map. Again, we're not predicting, we're not biasing, we're simply visualizing a map for how things may play out so we can hang in there once the trade has been put on. Okay? I'll leave you with that. Sorry about the static and these noise issues. This will be fixed. Good luck today. And of course, hit the like button. It is Like Friday. If you're on YouTube, please find the like button and click on it. Appreciate you doing that. Good luck today and have a wonderful weekend. Take care.